So yeah, when I saw this, I thought it was such a I'm doing a little like quick community spiel, which is I think it's a really, really great thing. I'm going to put it on a Thursday so that people go twice a week, which is really good. It works for me because it's my 2 days. But I've actually genuinely, I don't know if you guys have attended others. They've all been really, really engaging and fun. Lots of good learning. But it's just great to see this community and the space go from strength to strength. I think this is another one of those things, not just having the space, but then actually activating it with an activity like this. So I'm excited about that. So I figured I'd throw my hat in the ring and talk about something that I know a bit about and hopefully is interesting enough to you guys. So I figured everyone wants to know how to raise more money if you're a founder. So that seemed a good hook. So today I'm going to talk about how to pitch angels and a little bit about syndicating your deal. And I know you're all here for this. Thanks, Chris. This is the money part. This is the checkbook that you asked for, Tony.
Excellent.
I meant above us.
Oh, to flow from the ceiling.
They're raining on you.
I'm sure there's some tech up there that can print money and can just come down.
I've seen you wear a suit, Nico.
Yeah,
that's not really you.
That's got to be
That's
a while.
AI.
That's before you
Big
meet
journey.
That's the last time someone paid to take a photo of me, so it's probably it'll be there for about a decade or more. So really quick intro, particularly for those who don't know me, and maybe a bit of a recap or different frame on those who do. I started my startup journey as an accidental founder, kind of in a similar space to where BB and Paul started their business hair guides. We were looking at sort of creating incredible travel experiences. The long story short on that is that it's a sexy idea that bombed badly, but it got me and my wife Colette and our co-founder Roger hooked on this kind of working in startups. And I haven't looked back since. Before this, I was an architect, so building architect. Often when I say that in tech circles, people go, oh, networks. I'm like, no. So it's a complete departure from that, and I definitely would not look back. So by now, I've spent, I looked at it for this presentation, I probably spent 12 plus years working in and around startups, mentoring startups and so on. I generally say that I'm an ops and sort of product guy. So it's a combination of, I guess, having some design thinking from my architecture days and being a tinkerer and liking that sort of thing. I guess the other probably relevant thing is that I've learned that I'm not a great founder, actually. It's not really my superpower. I'm much, much better at building a business than I am at starting one. I think it's a distinct difference. Some of you may recognize. And so yeah, I've since that first founding experience, have been helping other founders build their businesses, which I think is a much better match for my skills. The other relevant thing is I spent the last 4 years working in and around fintech, which is how I ended up with what I'm doing now. So both in a kind of GM and also in like a product role. So I've gotten scarily deep into things like credit files and stuff like that, which is thankfully no longer relevant to me now. But I've done some really interesting stuff in that. If anyone wants to talk about fintech, I'm all for it. The other relevant stuff is turns out I've been mentoring startups for about 7 years in various programs, the last 3 in StartMate, which I'm really privileged to do because it's kind of like a really big and successful accelerator. Yeah, I still kind of pinch myself when I think, I don't know why they asked me to do it back then, but it's been a really, really fun experience. That's really the in as to how did I even get involved with kind of angel investing personally, which I've done now. I think I have a portfolio I was thinking about it before this, probably kind of 10 individual investments directly into companies, and then maybe 3 funds. And I can talk about that a bit more, just specifically in the venture space. Despite what you guys might think because of this presentation, I'm definitely not a wealthy person. On world standards, sure, but I've always looked for ways, and I've had to add value in other ways, which I actually enjoy more anyways. So actually helping connect people and kind of, giving advice and trying to share some of my experience of building, trying to build up other companies. So I've done some consulting stuff and advising stuff, but the as an angel investor, turns out I've been kind of active for about 9 years. Doesn't correlate with the portfolio size, that's okay. But I've learned some stuff. The other really important thing, because it leads into like why the hell Aussie Angels, which is where I work now, is that I've been really stubborn about only working on things when I'm aligned to the purpose and mission of the company. I'm quite stubborn about that, probably because deep down, if I'm not doing something that I care the impact of that business, I'd probably be like a park ranger and I spend all my time outside. I just did, like, why am I doing this? I don't think everyone shares that view, and I'm really kind of, I think both parts stubborn and spoiled about that. And I've also been a hubby. That's what I called it. Is that what we call it?
Hubby. Ah, that could be it. Hubby, hubba.
Not a husband, but a hubby. I think it's kind of cute. Since May 21, so I've really, really loved being part of this community.
You're a hubby to Colette too.
Exactly. So that leads me into like, why did I mention the purpose mission thing? This is not for the sake of promoting Aussie Angels, but just to say, why do I care about doing this? Fundamentally, the thing that Aussie Angels is trying to do is to increase the flow of capital into early stage startups. And we see that, and I really mean this, that I also see that, and I have seen, having been an angel investor and a mentor and so on, there are barriers to people getting involved in that, both on the side of, some founders just don't have access to the right people, to the right networks, and that sucks, because it doesn't mean that they're bad founders or they're bad businesses. They just they have disadvantaged access to other people, no worries. But actually also on the other side, there are lots of people that want to get into investing in startups, and there are barriers on that side. So fundamentally, that's what Aussie Angels is about. The other thing that really got me over the line in terms of wanting to spend all of my, working creative energy to help this venture and this team and this, the founder succeed. Our founder Cheryl Mack, so she's quite well known as a kind of a super angel. Is the fact that when they first started, it was actually a kind of a not-for-profit organization that was looking at just doing, things in the space of adding, removing barriers and so on. Of course, like probably other organizations, they realize that you've got limited capacity and scale and impact. You can do that if you're always reliant on kind of external funding or grants. So they pivoted into what it is now, but it's still fundamentally a for-purpose, profit-driven company where we've got a foundation that's built in there, which is looking at, I mentioned that somewhere, through education, grants, and lobbying. So again, a big part of what we do is actually education. It's not the stuff you see on the surface, but we do a lot of education stuff. Maybe this thing is one of those, but we run a number of webinar series and so on. We're constantly active in that. This whole thing is to tell you that this is why I work here, because I think there's a really significant impact this has on people actually getting access into this investment asset class that want to and probably need to, and equally for founders who are looking for investment. So you can't change the sort of the diversity pool of the founders that get funded until you change the diversity pool of the investors who are investing. So if you want to read more about this and what we do for founders specifically, which is around kind of, I guess, keeping your cap table clean and giving you solutions to group a bunch of small checks together, head to the website. There's a founders thing. I have to do a disclaimer because I've now worked scarily close enough to fintech, so I have to say this. This is just my asshole opinion. I always say that because everyone has, sorry for the swear words, everyone has one, right? It's not financial advice. It doesn't mean that if you do what I tell you here, you're going to get investment from angels. I'm learning, we're all learning together. So in the session today, please participate, enjoy yourself, but like talk at me, get involved, call me out on stuff. I've said that to a number of people before this. And then there is an ask, and if this applies to you, do it, because I'm just gonna be really cranky if you don't. So I wanna start off by sharing, this is my little hype hook. I wanna start off by sharing something which I think is a bit of a secret in terms of, the psychology of angels. The secret is this. we all like to feel special, right? I'm special. But the truth is, we're all pretty much the same. And I think this kind of, to me, summarizes the psychological kind of journey and game when you're trying to talk to angel investors, is that to understand that they all want to feel special. And I say that even as like, I'm an angel investor and I know that. I want to feel special, even if I say I don't. But the truth is, I'm thinking like everyone else. So today I'll cover I'm trying to give you 6 kind of practical things that you can do and use when you're talking to angels. And this is at the end of this, like when they all fly in. So relationships first, sales funnel, last not first, FOMO, super important, time kills all deals, and finally, sell the truth. Can you guys all see that from, yeah? This is, if there's any slide, you don't need to take photos of things, but this is the one. Because it's everything all one place. I'm going to share this. I'm going to share this out anyway. So let's go through them. Relationships first. So capital raising is like dating. You do need to kiss a lot of frogs, right? I think a lot of people, I assume that a lot of founders go into the process thinking that I just got to find the one, but actually, and I talk later about it being a numbers game, you're going to get a lot of mismatches, and just, accept that that's the case. You're also looking for investors that you click with. First and foremost, it's about building rapport. It's not, how does this individual represent money into my company? That's should always be secondary, because when you have angel investors work with you, they're with you for the journey, maybe more active at first, more passive later, but for a very long time. So it's not going to be a successful partnership. It's probably a good way to think about it. If you just don't get along, right? I'm not saying in the sense of like you agree with everything, but just that you enjoy actually kind of in that limited space working on stuff together. You need to think of cap raising as a long game, one that's always in play, right? It takes time, and it takes time to build trust. Building trust over time. For example, a better way to start something like this would be, you meet a new angel investor, they're interested in what you're doing, and there's no pitch, there's no, I'm raising whatever, but just how about I add you to my investor updates, and you let me know whether there's anything that you can help with, or right, I'll just keep you in the loop. So sending investor updates to everyone who says yes to keeping in touch, and then showing over time that you're making progress towards your promises, is a much better way to build that relationship. I think what's relevant about this is, so rather than thinking about it as like, how can I close a bunch of checks in 3 and 4 weeks time, think about like, what relationships do I want to build now that are going to be possibly relevant in 6 to 12 months time? Which obviously, if you're thinking about capital raising, means you have to, that's why I say it's always on, and you start much earlier than you think. You've got to build a network, you've got to build the relationships around you, or people that are your supporters, regardless of whether there's a check or not. The other rude way to think about it is, don't kiss on first dates. Instead, ask for advice, ask for intros, ask for feedback, ask for questions. Anything but money. Because you're building a relationship, remember? Some of what I'm saying today might sound like I'm saying manipulate people. That's not what I mean. I just mean prioritize the human relationship first. And you're doing it right when they eventually say to you, when will you ask me to invest? Right? When you let them be first that says, hey, when are you raising? Like you hear those types of signals. So, I say you can then act all surprised like, oh, I didn't know that you were interested. That's a bit, neither here or there. But wouldn't that be nice, right? So let them want you rather than I need them. So the point being, put relationships first. I'm going to pause on each one. Anyone got any, want to throw anything at me at this point? Vinko, I don't have the time for this kind of shit. Can I swear? Is that all right?
You just did.
But that's like a light version. I'll move on. So think about just like anything with your customers, and when it comes to hiring, I think this might be obvious, but a lot of founders that I see don't treat the process as a sales funnel. It's kind of like a one-time thing. I've spoken to 10 people and I'm like trying to progress. It's like, dude, hang on, what are your numbers? What's happening here? So how many investors have you met? How many have you pitched? How many showed interest? How many have capacity to invest? Really important question that probably gets missed. How much could they invest if they were going to? How many verbal commitments do you have? How many signed offers do you have? It's just a sales funnel, right? And if you know your numbers, and it's a numbers game, it's a sales process with a weighted pipeline, right? So you, at any given point during that process, you should be able to say, like you would with your sales pipeline, oh, I've got about 200K sort of potentially on paper or whatever, right? Like you need to kind of know what that is rather than going blind. I also think really important, so you need to kind of find your investor product market fit in a way, right? So other than the relationships and the dating, there's a fundamental aspect of, I've met founders who are incredible, who I really like and get along with, but their business is not something that I'm interested in, right? So that's a tough one. But I'm sure that's true for many angel investors. I can see Colin's nodding over there a little bit. So I feel like there's kind of two things. There's a fundamental, assuming that your business is, sound and is going well and is working in a space that can grow and so on, and that you get along with the investor. There's still a third hurdle, which is like, do you actually have product market fit with that investor for your product? Your product being like, I have this opportunity for you to invest. Is that something that works for them, right? And then learn your conversion rate, just like a sales process. So I say, build a sales funnel. And that process probably never stops. I probably should have started at the beginning and said the best place to the first place and the best place to raise money is from your customers. I think a lot of people have heard that, right? The second best place, I'd argue, is probably angel investors, because they're often very close to you and engaged in the process of how you're building your business and are available to help and to support you and kind of stay there for the journey. It's their own money, it's their own time that they're putting in.
Good one, Vingo.
Yep.
Product market fit of investor. So would you consider an agnostic investor to be like, kind of like a red flag?
Not necessarily. I guess I meant on a very personal basis, right? So we've had a relationship over some time. You've been interested in what I'm doing, probably because there's an element of like similar minds, culture between the individuals, like founder and the investor. Then there's the, like, actually, is this business in this space something that you're interested in, like that you're backing at the moment? They might be very happy to spend time with you and help you out, but not necessarily to invest money in your business. And you want to understand that early on, right? And it could be just that they go, look, I'm just tapped out on AI, right? Or whatever. I've done, 3 investments in the last 6 months in AI, and I'm just kind of like, that's enough. So that's not something that you're going to know off the bat, right? But you're trying to find out. I don't know, I guess, as I said, I'm learning, you're learning. So, I mean, you could ask, like, have you made other investments in this particular space, recently or before? Why not? You're trying to kind of understand that.
Yeah.
Is that, yeah? Any other questions on that? Thank you for asking. Last not first. So really tipping into the psychology aspect. So I think the best way to frame this is like, this is from the point of view of an investor. When was the last time that you ate at an empty restaurant? Or the last time that you entered like an empty bar or nightclub? Right? Yeah, me neither. So the truth is that nobody wants to go first. But someone has to, really. Nobody wants to go first, but someone has to. Risk aversion bias is a real pain in the neck because everybody's kind of fundamentally geared that way. And you hear some stuff like Australian investors in particular are more like that. So actually, the thing that angels are hoping to be is to be the last check-in, not the first check-in, right? So if you think about, and I've seen this not just, I guess for myself, but also in the pattern of what I'm seeing through Aussie Angels, is that there's that innate desire for angels to want to be the last check-in, right? Because it's fully credibility and vetted and so on. And I think there's like an ego aspect to it. You feel so smart when you go, I just snuck in. How good am I, right? I just got on the cap table like that. And it's really hard to be first. And I think there's some practical aspects to this. So setting terms, angels generally can't do that, right? I should caveat this whole thing by saying, like, if you're talking about you're able to raise the full amount that you currently are looking for from 4 individuals who write 50K checks, so 200K, like that's a different story. Maybe you can do the whole round with angels. But typically what I see is that if you're raising like $1 million plus, you're talking about getting kind of like a cornerstone fund, for the agnostics, space, as Brian said, you're really talking about kind of getting a fund to be your cornerstone investor that might take 50-60% of that round. And then you've got time to kind of go back and look at like individuals and go through that process. Because building up from, trying to get so remembering that risk aversion bias, individual investors like angels, trying to get them over the line first when there's like 90% of the round to go is a really, really slow and difficult process. And the other way around is definitely a lot easier. So my argument for this is, instead of chasing many small checks to build momentum, chase a few whales, land one, and then all the fish will follow. So when you've got like, hey, we're raising a 1.5 mil round, 1.3 committed, we've got 200K left, you'll find that it's very easier to get angels to come in at that point. But you still need the relationship building at this point. You still need all the numbers game and everything before that. So just remember that the mindset is, it's not entirely empirically always true, but the mindset is investors want to be last, not first.
Are there examples where there's been some shifting of future and present tense to make that occur, where founders are creative with timeframes to make the sequence of investors feel like it's been flipped?
Yes.
Okay. What's your view on that?
Like, how would I feel about that being done to me as an angel investor, or?
Well, I just think as a strategy, it certainly answers this, but 2 slides ago you were like, long-term relationships.
Yeah.
And I think that breaks the first slide. Like.
Yeah, and like, I guess I was aware of putting this stuff together, that some of it's going to seem like it's contradicting. And look, it very well might. I'm not an expert. Sorry, that's the worst one I could have used. It's for the recording. It's not going on YouTube now.
Yeah.
Yeah. So I think my honest gut feel answer on this would be that in the first bit I'm talking about prioritizing the relationship, but it's not about raising. It's not about money, right? When it is about money, then the conversation is not that it shifts, but then you have this very difficult game to play as a founder who, to not manipulate it, but to like present timelines in a way that it kind of, you're fighting this like psychological hurdle constantly, right? I think it is a really difficult thing to do. I honestly don't know what the perfect answer is, but in subsequent slides, I'm talking about, the importance of time and how, if you're almost better off to have a round that moves, that seems like it's never open and then it's open for a very short amount of time. And actually everything's already been done in the background. And then everything's very you've got short time frames, momentum is already built, and look, we're closing it in a week, so if you're going to get in, you've got to get in, right? And probably even more so, if some people miss out, and that's happened to me, and by the way, we see this on the platform a lot. So did I have to explain a little bit better of what Aussie Angels actually does? I did. Okay, I did a terrible job of that. So our sort of bread and butter is you've got a leading angel investor who's experienced, who has a network of other investors that kind of follow them on their deals. So when they're investing, usually they'll open that up to their network. It could be 50, 100 other people, and they'll present that deal and share it with them. And so they'll invest, and other people will invest with them. They negotiate with the founder to get, rather than just like 50K, they'll go, hey, like I'll write a check of 25K, but I think I can get up to 200 from, you know, my network. Does that work for you? Sure. We make that all, like we cover all the sort of the admin and compliance and all that junk to make that really painless for them. And then and the founders end up with one line item on their cap table. I lost track of what was I saying just before?
No, you answered it.
Oh, right.
Yeah.
There was something. It will come to me. Timing.
Missing out.
Yes, missing out. Thank you. I don't know who said that, but that was the important point. We've seen time and again that if you've got, you know, 20 investors, so you think of a syndicate like there's one syndicate lead, they've got a group of like 100 investors that follow them. They run around. Usually we're seeing numbers like 15 to 20% of them will participate in any given round. So you've got 20 people who go, yeah, I'm in. And there's like always a few people who are like really slow to move. And our advice always to the leads, because they control the timeline on the deal on our platform, is close it sooner and reward those who've acted quickly. And the people who miss out, it'll be the last time they miss out. And that's actually is true. So I think that probably would work on the founder side as well, is that if you've got some people who, you know, you've run a tight process, it's quite a short timeline, you've got momentum, and some people just don't move fast enough, they'll come back to you and go, oh, I was gonna, and you go, sorry, dude, next time. And they'll remember that and they'll go, I hate missing out. So I talk about that here. I think the thing that we've learned is the most powerful way to combat that sort of risk aversion bias is investors have possibly just as strong of a fear of missing out as they have that risk aversion bias. And so I think using that to your advantage is a very smart thing to do, because investors really hate missing out, right? It's happened to me personally. I know people who it happens to, and it hurts. Like it's weird how it hurts that you go, I can't believe I missed out on that. I'm really pissed about that. I'm happy to disclose. So one of those was Cake Equity. I don't know if you guys know Cake Equity. I spoke to them during StartMate, and they raised the round during StartMate when they were in the program. That's when I first met them. And I just didn't do anything really at the time. I was being really slow. And completely missed out. I only found out that raised after it was done. And I'm like, what happened? And they're like, oh yeah, no, we did it, you know? And thankfully I wasn't really necessarily in the process. I wasn't like I was holding them up. But I remember just going, I think I wrote 3 emails in a row to Jason after that saying, make sure you tell me next time. Like, please, please next time that you open you got to tell me. And he was like, yeah, sure. And I'm like, no, but really, I mean it. Like, when's it going to be? I was hounding him, right? And I think it speaks to this really strongly. Like, you genuinely feel that hurt when you go, I can't believe that it was me who didn't decide, didn't answer my email, didn't open it, didn't look at the pitch deck, whatever. And that's the reason why I missed out on what I think actually is a great founder and a great business and something that I care about. So use this to your advantage. Some examples: small allocations, high minimums, short time frames, social proofing, right? You know, oh, we're talking to Blackbird. Oh, you know, like stuff like that, right? External validation. So you've got whether it's like an industry partner or something. I mean, a lot of this stuff is common sense. And I guess it's about, like, if you're thinking about that last not first thing and how to get people to feel that actually this is something that's moving quickly, it's a great opportunity, there's not a lot of time, there's not a lot of space. If you're interested and you're gonna act, you need to decide, right? And so you could create that sort of engine by having things like small allocations, high minimums, short time frames. As I said earlier, the only thing that's stronger that the risk aversion for angel investors is probably FOMO, because nobody wants to be the investor who passed up on Goober and Airblob and Canva. Because you always remember that. I mean, a lot of the time you hear about people who say, oh, I invested in such and such. I'm thinking of one in my head, Panda something. You know, I made a 3,000x return would be me. There's way more people who miss that, right? And those people remember that. So use FOMO. I want to pause here. This is an important one. So just any questions on, does it just kind of fundamentally make sense? I actually, the reason why I'm pausing is because I definitely don't see founders using the knowledge of this psychological thing for angels and other investors enough.
So, I mean, we've raised a couple of startups, you know, went through the process. And I mean, I'm just wondering, like, what's your, like, because FOMO is tricky, right? Like, you have to give them something, like a carrot that's dangling, you know, like, you'll make this 3,000 times. And which is, you know, you can always walk up as a startup and say, oh yeah, you're going to make, you know, billions, whatever, right? But and everybody will be like, yeah, you know,
Don't say that.
Yeah, no, but you know, like, it's hard to say, you know, or, you know, there is a certain return on it or something, right? Like, so the only way, I mean, like, I'm just wondering, like, I'm just, you know, what do you think is the best, I mean, what kind of stories have you heard that created this FOMO, right? Because it's easy to say, but
well, Chris, would you mind, can we workshop, like, your business Tapper and me, let's pretend, or maybe not pretend. No, but like, and we haven't, like, I'm not saying that's, but I think we could use that workshop example now to discuss, like, the answer to your, sorry, what was your name? Philip, to Philip's question. So, in your example, if you came to me and you said, hey, Vinko, I know that we get along, we like talking, we do, we're mates. So it's like, I don't mind spending time with you, right? So I wouldn't mind working with you for a bunch of time. The check on the relationship side, and we've been talking for months now. Second thing, you know that I'm kind of vaguely interested in the space that you're working in. Like, you know, it's construction. I've got a background in you know, built world. You know, I helped build J-Ride, so I understand like how to, you know, and similar to Tony's business pools,
Architect.
like, yeah, and I sort of understand the space and the things. And so to answer your question, if you came to me and you said, hey, the growth has been crazy, right? And we've just started to open this like cap raise, and these are the people that have come in, and there's just like a little bit of space. Who should I talk to? Do you know anyone who wouldn't want to miss out? As I'm trying to frame it as you go along, who wouldn't want to miss out on this? I would feel incredible FOMO at that point. I'd be like, I wasn't gonna.
I would say, you know, we're running a fund, you know, and people are coming to us, and I'm always like, okay, yeah, you're making all this money, ARR, it's growing, blah, blah, blah.
Yeah.
But you're not making any money. That's why you're asking for some, right? Like, you know, you whatever generated $1 million, but you have only in the bank, you got minus 50,000. So we're, you know, and then like, yeah, you know, but you need all this cash, you know, to run it, and you know, you know, there's a tricky point where you say, look, you know, I'm actually making cash, right? I don't need your money, which is always a great pitch, right? Like, you know, I'm making whatever $250,000 anyway. You know, we could scale a bit with more marketing. We'd like your money, you know, but we don't need to. Whereas, anyway, you know, like
no, that's a fair point. I think a fund and an individual angel investor will have different. Basically, I think it comes down to kind of due diligence and, you know, do share responsibility. Like if I go, I'm putting 10K into a company, I got no one to report to about that.
But that's it, right? Because like, you know, of course, angel investing is at this stage, right? Like, whereas there's no, like, where there's negative or like there's no cash, right?
Yeah,
so you are for sure asking for money that you really need. Yeah. Right. So that's why I'm saying like the FOMO is so much harder to build, whereas compared to something where you're running company, it's cash flow positive, whatever, right? Then it's quite easy. But you're in a tricky spot at this first stage, anyway.
Yeah, I think there's two different things you're talking about. One is he referred to pitching, like creating a sales deck, creating a sales pitch, which is great. When you're in front of an audience, you get up, you get your slide deck. Where I think a lot of people lose, you know, their preparation is how to have a conversational, you know, engagement about what they're doing as an organization, as a business, and they don't role play it enough. They don't spend, so they come off as sounding cheesy. They say they use these throwaway lines. They think they're going to work, but you know, you hear them a million times. People are pitching them left and right, and so I spent a lot of time just trying to work with people to understand. Hey, let's role play this. Let's role play. If you can get past me, you're going to get past a lot of people. And you know what? I'll be you, and I'll do it for you, and we'll work out. We'll come across 10 10 different ways to represent that message in some casual way that you're comfortable with, that you don't sound like an idiot when you present it. So I think a lot of people just spend a lot of time on the deck, but they don't spend enough time on the conversation.
Yes.
What the elevator pitch? Hey, pitch me your story in 45 seconds without sounding like an idiot. That's hard to do. It takes a lot of work to get that right and to get everybody in your organization representing that 45 seconds the same way. I bet if I walked up to an organization, a startup, went to 4 people in that business and said, hey, pitch me your story in a minute, I'm gonna get 4 entirely different stories. So I think that's where a lot of focus, a lot of emphasis can be put, is just work on the conversation, work on the 45-second pitch. Let's not sound like idiots. You know, I get the deck, we all spend time on it, but what you're talking about is really important. And I think that's a big area that people kind of drift away from.
Yeah, thank you. So what was your name? Kyle. Kyle, thank you. I think you're absolutely right. This is, to me, why the focus of, having heard what you just said, if I was a founder, I'd come to be like, hey, Kyle, you're really good at helping me understand how I should actually think about it and talk about my business. Could you sit with me? I'll just talk you through it, and you can tell me, like, and just have a back and forth, give me some feedback.
Or I'll do it for
I'll
you.
come back
I love pitching people's business back to them.
Exactly.
I love it. Let me read your business. I'm gonna pitch you your business. And I'll go, oh, I like that, but I didn't like that. And I'll go, okay, well, let's take that.
Yeah.
Let me try it again a different way. And you do it 10 different ways. By the end of it, they go, you know, I could actually say that, Kyle. And I feel comfortable saying it.
Yeah.
Because sometimes what comes out of your mouth doesn't work for me and doesn't work for the person next to you. So you gotta find what's comfortable for that person in that environment, which is casual, in an elevator, whatever the pitch may be.
And I feel like that if I was a founder going to you, Kyle, I'd come back to you probably 3 or 4 times over the course of 6 months. And I'm hoping that by the end of that period, you would have convinced yourself you should invest. I never asked you. You would just be like, I'm going to invest. Oh, okay, great. And thanks so much for all your help on all your feedback and getting my story right and so on. And that's kind of, yeah, I think you're spot on.
I think just a comment on the FOMO. I've seen some founders execute it really well. It's just playing investors off each other.
Yeah.
So it's like, you know, the guy that founded XYZ, he's in, and this other VC, and the business almost becomes secondary.
Yes.
And it's more like, oh, these guys have validated it, like,
yeah,
kind of like, I'm in.
Yeah, if you're like racking up the checks in the round, I think you're absolutely right. Yeah, I mean, you know, founders of Linktree are investing. Ooh, you know, like, I mean, it doesn't matter how much.
And then back to the age-old thing, like, people aren't really necessarily investing in the business, it's the founders or the team. And it's
Yes,
like,
especially early stage when there's no financials or like they're not solid. It's like you can't tell. It really is. It's absolutely relationships. It's founders based, and you know, angels don't have the due diligence they have to report, so they're going to make decisions more loosely, more risk aggressive. Yeah, absolutely.
I've also found sometimes having some government support as well, and just give some validation, especially early days when they go, oh yeah, they just feel that the government's done some sort of due diligence to give you the money. Not always true, but
personally,
around grants, you mean, like you've had some initial grants from government?
Yeah, you've got some grants, and you see, we've gone through a long process. The government gave us, you know, 100 grand. We're like, okay, that sounds like they were into it.
Yeah, that's actually interesting. So if, unless it was an important part of your kind of like, because when you first said government, I thought you meant kind of as a partner or a pilot or whatever.
Yep.
But so that was an important part of your kind of go-to-market strategy, absolutely. But personally, as an angel, if you said, oh, I've got this, the way that I would think about grants and stuff would go, well, you know how to scrap, you know how to, you know, get shit done essentially that's going to bring money into your business, and it de-risks, like I don't have to put in as much and you don't have to raise as much, and so you're actually capital efficient. So that, from that point of view, but to me personally, the fact that the government is giving you money wouldn't make it a better investment at all. Just on you would be like, oh, okay, yeah, you frugal, like you know how to, that's cool, you know? I don't know, does anyone else have any other opinions on government?
I've got a question about what we were sort of just touching on here. How do you sort of judge that? Well, actually, it's probably better just to ask from an angel investor perspective. When do they just call bullshit, or they can see through your play of going, hey, we're only going to open it for this amount of time? You know, you've got to eventually draw the line in the sand and go, that's it.
Yes.
But back to what you were saying, you really need that money. You really need to keep it open, and you're trying to make sure you're playing all your things here, but you know, you go, hey, it's going to close in May. And then you get to June and you're like, oh, how do I follow that person up? And then you're coming up with something else. Look, yeah, a couple of investors that are just coming in late. Are you still interested? Then you're in July, and you know, when do you know?
You're never open until you're closing.
Yes, that's it.
No,
Well,
that's
yeah.
the answer. When you gonna open the round? Oh, soon.
Okay.
Like, but if I, when I do, like, I just need to know, are you in? How much are you in for? I'm just making sure that, like, I know that it's aligned. I'm getting my pitch right. Not open. Actually, it's open. Not open. Right? Open because we're closing.
Yeah.
It's like if you can play that game,
Yeah.
I think that works.
But then, so is that the point of the angel investor can't sort of see through it? It's like you're actually actively saying it's closed, it's not open.
No, but I'm not saying you would close it on me. You'd call me up or email
It's
me
not
and
open
go,
yet.
it's closing soon. Like, we've had an incredible interest. It's actually going to be really short. I spoke to you first. Thanks so much, Vinko, for your time. I just want to make sure that you don't miss out. 'Cause it's going to be open for a short time, it seems. So we're going to, are you in? I don't want you to miss out. That's the flip side of that. But you've already done all the work with me. You've gone, you know how much, most likely, you know what my capacity is, when, timing, alignment. I've already given you all my annoying and sometimes not annoying questions about your business and how it's going and my advice, which you can ignore or not. All that stuff's already happened. So then...
More of an EOI for a longer period of time up front.
Yes.
Okay.
Yes. Which is actually like the pipeline, but
yes.
That's not the
But
communication.
talking about it like that.
Yeah.
That's good.
Yeah.
So on that point as well, I mean, that's FOMO, investors versus investors, but is there a sweet spot for, say, like an MVP versus a product about to go to market versus a commercialized product that you'd want to get into, like around that? Or, some people just come up with an idea, so to speak. Yeah,
exactly. I think all that stuff around FOMO is around validation points, right? So the earlier it is in the journey, like what are the things that you've got? I remember when I first met Chris and he was talking about, we reached out to like 100 plumbers and 90 of them signed up. To what? He's like, just to be part of what we're doing. So why is this relevant? It's like, well, this is really even earlier in the journey and so on, and you could say none of the kind of usual metrics, but I was like, wow, that's a ridiculous response rate, right? So I think you got to cater to, and this is probably the next slide actually, you got to cater to like, where are you at right now? And like, how can you sort of, not hype, but how can you sell that, right? This is the traction that we're getting, because that's what you've got right now, whether that's on, product or whatever. But generally speaking, I would say most investors would be looking, and I'm not experienced as a deep tech or a health tech investor or whatever, but most investors would probably be looking for like customer validation points of some kind. I better move on. Time kills all deals. So I think we've talked about it a lot, but in my opinion, in my experience, a fast no is a good no. Just like sales, right? Like, just give me a quick no, rather than a slow yes, because that could nuke the entire deal. Someone who's umming and eyeing, and that's why you're holding up the round and people can still pull out at any point, and someone who was like strong yes at the beginning, it's been 2 months, hey, it's time to collect your check, yeah. So like, is it worth waiting for that fence sitter? No, the answer is no. Better to have some investors miss out rather than not moving ahead at all. And I was talking about that, like, some will miss out and make it so. Don't nuke your entire round because, even if it's less than you actually wanted, rather than having people drag it out, because it's just gonna bubble up as like why is it not closing yet? Why is it not closing yet? What's going on? Like, why are they struggling? It's not true. It's like it could be like it's an opaque experience for the other investors through you as a founder. It could be that you're just having 3 annoying conversations with people who can't decide. And so like, you kind of cannibalizing all of the good stuff. So build momentum. Oh, well, artificial deadlines are your friend, right? Like I think we talked about that. And they're great scapegoats, right? Like, need to close by this time because reason. Like, does it really matter whether that's kind of actual or not? A good example could be like, need to go on holiday in February, got to close by then. Can't say that. So, right? Use an artificial deadline, just like sales. Momentum, build momentum, drive urgency, and then close a deal. Because time kills all deals. Long deals, they take forever, usually die. This goes to something we were talking about earlier, but sell the truth. So I think, I don't want it to make it seem like what I'm trying to say here is, because I think reputation and relationships is really important. You don't want to lie about stuff. Like, oh, we're doing X and it turns out you're not, like as in we're achieving this, but actually you're not, or promise something like we're going to do this, but then you don't. These things don't work, right? So I framed it here as like either tell the truth, which might be very proactive, or just whenever you asked, don't lie, right? Like don't lie about stuff. So that point around, so if you're not actually going to open the round until you've got enough momentum and expressions of interest, then make it so. Like don't actually open the round. Don't tell people that it's not open or it is open. Like be honest about it. But then like you act accordingly, right? The other thing that I think a lot of people miss, especially Carl, you're talking about pitching. A lot of people forget how excited they were to work on this thing, and then when they get to like into pitching mode, it's just slide. It's like, dude, how can you expect me as an investor to get excited about your business if you can't bring the excitement, right? So just, I know it's obvious, but it's completely like you see it a lot. Founders just forget to like bring the energy, like show your excitement, be authentic and go.
Sales, you're selling. It's just sales.
Yeah, but it's not like kind of like you're not lying. It's like I'm really excited about this. It's my vision, and man, I could be wrong, but I think we're really onto something. And like, be excited, because if you're not excited, they're not excited. If they can't get excited, they're not investing. Like I said, do what you say. So always promise what you can deliver. It's okay to take leaps. Whoever said that being a founder it's a safe game. It's not. We're aiming to go do this thing. Wow, that sounds really outrageous. Like, yeah, that's what we're going to try and do. But don't say you're going to do something and then just not deliver on that. That track record over time, it's the opposite of building trust. This is obviously a bit unfair, but serve your turn on a silver platter. So, if you've got very, very early pre-revenue, pre-whatever business, it doesn't mean that you have to cower and go, oh, well, it's not quite there yet. Like, still present it as this is incredible what we're doing, and present it in the best way possible. Because again, it goes with the excitement part. If you need to be excited about what's going on, so they can get excited about what's going on. You don't have to, talk about how it isn't something. Just talk up what it is. And that is, you're staying in the sort of the truth box, right? You're not saying stuff that isn't true. You're not going, hey, this, an example I gave in here, I talk about like, it's fine dining, not fast food, and certainly no magic, right? Magic is lies, right? It's like, we have such and such, and it's like, oh no, it's really just like a fake thing. That doesn't work, right? And it's not fast food because it's not just the factory. Like you've got to, it's your startup and you're the founder of it. But how fine dining talks about their menus. That's the way that you should talk about the validation that you have, the customers that you have. Show the excitement, talk about, give it a fine dining spiel. So don't just tell the truth, sell the truth, but make it true. That's the last bit. And I'm looking at time. We've got I think 9 minutes and then we're out. So this is my ask. If you're raising within, say, next 6 months or so, or you think you will be, reach out to 3 leading angels and just start talking, right? Like find 3 individuals you go, ooh, they kind of look interesting, and just start a relationship. I've even written a cold outreach template for you on the slide, so you'll get that. You're welcome to use it. Just send that as the message. It talks about, hey, I just want to talk to you, basically, right? So you can click that and get it. So I'm really, really expecting guys, like if you're in this bucket, please do this. I've given so many presentations on random stuff in the past, and there's always an ask, and it's usually like 1 out of 20 people who could do it, who do it, and I'm like, it's for your interest. It's for your benefit. Please do it. You've got nothing to lose to make 3 new friends, right? And here's a directory of 24 plus of these people on our platform. They're all publicly visible. You can click through to their syndicate. All of them have their LinkedIn profiles there. Go to LinkedIn, send that message that I gave you for your business, right? You don't have to even write it down, like I'll give you this. So it turns out that we're trying to make this stuff public and make it accessible. That's what we do. Right, stopping there. Thoughts, questions?
Just a question. So, kind of the stages once someone raises from an angel to a more traditional VC, like, how do you see that gap for founders?
Do you mean when should you raise from angels at what stage? Like, as in, when is it worthwhile talking to angels?
Maybe so. Yeah, you're a founder. You raise some money off some angels, and then how do you get to like the next stage around raising like the next major fund with the VC?
So if you're pre-seed, let's say, and you've raised some money from angels, how do you move to the next bit? I don't know. I don't know enough about this. I'm not going to even pretend that I know the answer. But I bet there's people in the room who know. Somebody's got to know more about this. Yeah.
I've got a little tip that I got told. When you're looking for your angels, always look for a lead that usually is looking for a way to build their investment. So they're looking for the net. So they've actually got the people to invest, and they go, "Cool, I'm in on this round. Those guys can't come in this round, but I'm gonna, when it's ready, I'm gonna take it to those guys." And that's kind of what I was told. Is try and get those
Actually, thank you. Now that you've said that, I just remembered. So I think I've in the past been involved in capital sort of plan raising conversations with founders well in advance of their next round. And so I think by involving your early angels, who are your earliest supporters, have the most to gain from you being successful in that journey. So getting it across them, talking to them about, we're raising this now, we're going to raise X, Y, Z soon. Let me start talking to you about that. I think that's helpful. The other thing is, I guess obviously asking them for introductions, because I think a lot of the angels who experienced have connections into various funds, and they'll have friends or contacts, and those guys also want deals. So everybody wants deal flow, right? So if I'm able to, for example, introduce you to someone at Rampersand, sometimes they'll be like, nah, no thanks. But sometimes I go, thank you, Vinko, that's really helpful. And so I'm helping them, but I'm actually also helping myself, because if I've invested in that business and they invest, there's the pop. So I think that probably helps. But yeah, traversing that, and I have to be honest, like I haven't been a founder who's traversed that, so I don't want to talk out of my ass too much.
A chicken and egg scenario around. So angels early stage, we need to get a whale first, then the angels will come in. Then there's like a pre-seed. I haven't seen too many angels even touch unless it doesn't need to be revenue, but it needs to be proof of some kind of traction proof that definitely links to cash. How have you seen that almost a myth that angels are early investors as opposed to actually fairly risk adverse? How have you seen that cross, or have you seen?
I've seen the opposite.
Okay.
I think that so there might be some people in the room who are part of angel groups. Angel groups have notoriously they've done a little bit of a disservice, I think, to the ecosystem on this regard. Because they've been filled with investors who have experience in perhaps finance and not necessarily kind of early stage ventures startups, haven't been operators themselves in those early stage startups. And so they're looking for financial proof that just doesn't make sense at that stage. And so I think what you're describing is a sort of a 10-year legacy problem. Which is why something like Aussie Angels is trying to like rebuild that pathway. Because in my experience, angel investors who come from startup space are very willing to be early, don't care about revenue metrics. If you've got other stuff to show and they go, oh, that's really exciting, I like you, I like where the business is going, I like the space, and actually the other thing is probably check size. So if you're asking an angel to write a 100K check, they're going to do infinitely more due diligence than if they're writing a 10K check. So
I've met, and we've got a great angel on our cap table that raised our valve before going in and set it up in so many ways. And so I've met, and there are good actors definitely, but and maybe it's just legacy from.
I think so.
A legacy issue. Yeah,
because I see through our network and our platform, I see angels will definitely do pre-seed. earliest rounds. In fact, I mean, at StartMate, all the mentors there, most of the companies are raising for the first time. And what I see is that the exciting companies, those investor mentors are falling over themselves to get involved. I've done it personally. Like there were companies that I was like, I know you're not raising yet, but just make sure you know that I'm putting 10K in when you get there. And then you're trying to, like, midway through the program, when they haven't even started, you're like, can I just send you the money now? And so that's stupidly early, really.
Yeah.
And Vince, do you have any view about, although everything's going to be, a bit mixed, but between angel groups and then individual angels? Because angel groups, some can be great, some can be pretty terrible.
Yeah.
But the amount of investment that they get quite a lot of attention because it's easy to find them. Suncoast Angels, Brisbane Angels, Sydney Angels, whoever. Pretty Aussie Angels perhaps, but it's pretty easy to find. But the amount of investment by individual angels is about 10 times the amount in Australia that the groups put in entirety. Yeah. And I've seen individual angels who are more typically successful entrepreneurs who've got a high net worth who invest. I've seen them invest sometimes $2 million in a company with very light due diligence, and very quickly. So I just wonder, have you any view about, the kind of the role of angel groups, which is part of the mix, but also these individuals, and how do you get to the individuals? Are they part of Aussie Angels? Is that what you're doing, or what's
the individuals are, the groups are not, and there's a distinct reason for that. So I'm going to start this answer by saying I'm heavily biased against angel groups and heavily biased towards this model, which is I wouldn't have joined the company if I didn't. It wasn't like I joined and then went, oh, that's my opinion. I was already part of angel groups. In my experience and my biased view of this is that the two problems with angel groups. So one is the fundamental basis of the process. Well, I mean, I talked about the cultural issue, which is like you're just looking for the wrong stuff. Like if you're going, what does the exit look like in 5 years? Oh, kill me. Sorry, trauma. And then the other one is it's a long and slow drawn out process because they're following some sort of, trying to appease a bunch of people together. And lastly, the person who does the most work in those due diligence circles has no reward for the work that they're doing. They're just another 10, 15, 20K check along with everyone else. So what's the incentive? So the reason why what we're doing, I think, is working much better is because you as an individual angel investor, we're going to invest anyway, right? You've already made that decision. You've done your due diligence. We give you the ability to extend that into a really easy way to extend that into a group of people, but you also get rewarded for bringing their money in. So now you've done all the work, you've got the relationship, you've done the due diligence yourself, you've written up the deal memo, and you're opening it up to the rest of your network. You get carry out of that other amount. And I think, and a lot of the people who are really active on our platform are like people who are, I don't want to say like ex-startup operators, but people who think about investment the way that I just said, which is like, well, it's early. So what are we looking for? Proof points that aren't, when are you going to make profit and how many years until, what's the multiple? Like, doesn't matter how, like, what are the fundamental factors? And that's only what we see on the platform. Before the platform, I know they already have a relationship they've built over time. I know they already like working together. They may have already invested previously. This individual angel would have, right? Maybe it's on their second round that they go, oh, now there's more. Now I can, you're talking to say tier 2 VC, they're going to put in $500,000 plus. So, hey, I want to follow on this time, but can you make 200K available? Because I'd like to bring in the rest of my group. That's a very, very different process. And it's in their interest to do so. Financial interest to do so.
Thanks.
Yeah, no worries.
Time for one more question, Vix.
Can you tell us a bit more about how the angels on Aussie Angels are vetted? Is there a certain level of sophistication there, or anybody can enter the platform?
No, not anybody. So we're only legally allowed to work with wholesale investors. And to be wholesale, there are 3 pathways. The most prominent is that sophisticated investor thing, which is essentially, it's like the rich test. So you either have 2.5 million net assets or 250K income per year for the last 2 financial years. You can go to an accountant and say, here's the template, sign it, you check my financials, and off you go. So that's like the majority. The second one is professional investors. So you manage an AFSL, Australian Financial Services License, and you've got a fund of 10 mil plus, you're a professional investor. So you automatically are wholesale. The third path, which is kind of gray area, is experience. So there's a gray zone where you as a investor are not admitting that you've got experience. You're accepting a level of liability. We as a responsible manager of an AFSL are saying, we've done the due diligence on you and we think that you've got the experience in investing and assessing deals. And we've actually given you additional education and testing. So we're happy to like kind of, I guess, certify you as a wholesale investor. That's something that's increasingly growing in popularity and demand, which makes sense because there are a lot of startup operators who know their stuff, who don't have the assets and don't necessarily have that income in the last 2 financial years, but who want to get involved in angel investing. The other side is like bringing the minimums down. So the lowest minimum on our platform, like somebody can invest with $2,500. Again, all wholesale, but that's a really low minimum. So if we're trying to encourage people to invest in more deals and spread their risk out, which makes sense because previously it was like, well, I got to get, if I need to make 10 investments in 2 or 3 years, and the minimum checks if I'm going directly on the cap table at 50K, so I got to have 500K. I'm like, oh my God, and that's 5% of my net assets. So like, that's a hard equation, right? We're talking about like $5 million you need to have of assets before you can like be an angel investor. That's a really, really slow, hard journey. So you change that to 5K checks where you can have a portfolio of 10 companies with 50 grand. It's different.
And is there a minimum amount of deals they have to make in a year, or is there?
No. So that's there's no cost to angels to be part of syndicates on our platform, and no cost to leads to run a syndicate. It's only when there's a deal. But leading angel, like the leads, are the ones who are getting deal flow and they're investing, they're active anyway. So they're the people you talk to. The rest of their syndicate just follows them. So it's really like they're the key. And so when we think about us as a platform, they're our primary customer. We're building tools and making their lives easier and all sorts of like all the education, all the templates, everything that we build is to make them more effective and their lives easier because then all of the rest of the stuff follows. So as an example, we don't have a funnel of like startups pitch to us and then we distribute. We're not a marketplace because actually the lead investors, when I say lead, I don't mean like the way that normally you think about like, oh, this investor's leading this round and setting the terms. No, I mean as in that angel who you're closest to, who's going to be investing anyway and brings it to the rest of their syndicate. In our eyes, they're the lead of that syndicate. They already have the relationship with you. They are already going to invest. They've already vetted they're interested. Now they're expanding. Basically, they're multiplying their impact for you and for them and, for the group. Yeah.
Thank you.
All right, thanks, Rico.
Thanks very much for being For anyone who didn't get their question asked or who wants to with Brian, Vince sits upstairs when he's in, and I'm sure, as you know, he's been so generous with his time today and his knowledge. I'm sure he'll be happy to catch up with anyone one-on-one. Thank you. That was well done.
Close day.
What an A.